Every civilization in history believed their money would last forever. From gold coins in ancient temples to digital numbers on our screens today, every age told itself the same comforting lie. This time, our system is different. This time, we've mastered value, but history whispers a crueler truth. Every currency that ever existed has died. Every empire's money eventually turned to dust. It doesn't happen all at once. It begins quietly, in ledgers, in promises, in the invisible space between trust and greed. And by the time the people notice, the collapse has already begun. So why does this pattern repeat, century after century, no matter how advanced we become? And could it already be happening again, right now? To understand why all currencies eventually die, we need to step back thousands of years, to when money wasn't yet numbers, but objects of real, tangible worth. In ancient Lydia, over 2,500 years ago, the world's first minted coins appeared, stamped from electrum, a natural alloy of gold and silver. They were heavy, beautiful, and real. Their value was tied to the physical world itself. But even then, corruption began to creep in. Rulers learned that if they mixed the gold with more silver, just slightly, they could create more coins without finding more gold. The people didn't notice, at first. It was the world's first case of monetary debasement, the slow poisoning of trust in exchange for short-term gain. And that cycle, the printing, the dilution, the denial, would go on to define every major civilization that followed. Perhaps no story reveals this pattern more clearly than ancient Rome. At the height of its power, Rome's currency, the silver denarius, was a symbol of stability. It paid the soldiers, built the aqueducts, and funded an empire that stretched across continents. But empires are expensive to maintain. Legions demanded pay raises. Wars consumed resources. And citizens demanded bread and games, without higher taxes. So emperors discovered an easier solution: mint more coins, using less silver. Over the next 2 centuries, the denarius went from nearly pure silver to less than 1% purity, a cheap bronze disc coated in deceit. By the time Emperor Diocletian ruled, the Roman currency was worthless. Trade collapsed. Prices soared. Merchants stopped accepting imperial money. Rome, quite literally, outspent its reality. And when money died, Rome followed soon after. Centuries later, in the medieval world, kings and merchants tried to learn from Rome's mistake. They tied their currencies to precious metals again, gold and silver coins with fixed weights and guaranteed content. But human nature hadn't changed. Wars still had to be fought. Palaces still had to be built. And greed still whispered, "You can always mint just a little more." England's King Henry VIII famously shaved the edges of his silver coins, reusing the clippings to mint new ones. His subjects quickly learned to distrust royal money, calling him Old Coppernose, because his coins, once silver, revealed the copper beneath where his portrait wore thin. By the 17th century, Europe had turned to paper notes, representing promises to pay in gold. At first, people rejoiced. Paper was light, portable, and official. But they had unknowingly entered a new era of deception, one where money could multiply far faster than gold ever could. And from that moment forward, the countdown clock began ticking for every modern currency. Fast forward to the 20th century. World War I forced governments to abandon the gold standard temporarily. They needed money faster than gold could supply. They promised it was only for the war. But once the war ended, they never went back. Inflation swept across Europe. Germany's mark collapsed so violently in 1923 that people burned their money for heat. By the end of the war decade, a single loaf of bread cost 200 billion marks. Humanity had discovered the ultimate power, the ability to create money from nothing. And once that power was used, it was never forgotten. Even the United States, long seen as the final anchor of real value, couldn't resist the temptation. For decades, The dollar was tied to gold. But on August 15, 1971, President Richard Nixon severed that final link, declaring that U.S. dollars would no longer be convertible into gold. From that day forward, every major currency on earth became fiat money, currency backed by nothing but government decree and collective belief. At first, it seemed like liberation. Governments could fund growth, banks could issue credit, people could buy homes, cars, and dreams. But behind the illusion of prosperity, a slow decay began. Fiat money has a fatal flaw. It requires endless expansion. Because in a fiat system, money is created through debt. When you take a loan, new money comes into existence. When you pay it back, that money disappears. So if the economy stops growing, if people stop borrowing, the entire system starts to collapse under its own weight. To prevent that, central banks lower interest rates. They print more money. They inflate bubbles. And every new solution pushes the system further away from reality. It's like a patient who survives by taking stronger doses of medicine that slowly kill them. Every debt-based currency, by design, must eventually die. Because infinite growth is impossible in a finite world. When a currency begins to die, it doesn't announce itself. The symptoms hide in plain sight. Prices rise, but wages don't. Assets inflate, but savings erode. The rich get richer, the poor get desperate. Governments promise stability while quietly printing more. Inflation becomes normal. Then it becomes accepted. Then it becomes catastrophic. When trust breaks, people look for anything real: gold, land, food, or foreign money. Trade slows. Fear spreads. And the currency that once defined a civilization becomes its greatest liability. This is not theory. It's repetition. The French livre collapsed during the Revolution. The Confederate dollar vanished after the Civil War. The Austrian krone, Argentine peso, and Brazilian cruzeiro, all rewritten, replaced, and forgotten. Money dies quietly, then suddenly, and each time, society tells itself the same comforting story. This is temporary. We'll fix it soon, but history suggests otherwise. We are entering what historians might one day call the Age of Reckoning, where currencies no longer die in isolation, but together. Because for the first time in history, every major currency on earth is fiat. Every nation runs on debt. Every economy depends on printing. And there is no real anchor left to reset the system. Sensing collapse, governments have begun preparing their next evolution: central bank digital currencies, CBDCs. They promise efficiency, traceability, and safety, but they also represent total control. Imagine a world where every transaction can be tracked, limited, or reversed, where spending can be restricted by category or behavior, where your money can expire or be frozen with a keystroke. This is the new frontier, a digital replacement for dying fiat systems that offers stability at the cost of freedom. It's not a conspiracy theory. It's policy in motion. Over 130 countries are exploring or developing CBDCs, and while they may extend the life of currency, they also end the era of anonymity, the last shred of independence within the financial system. The question is not whether digital currencies will rise. It's whether they will still belong to the people who use them. From Lydia to Rome, from London to Washington, one truth has remained constant. Money reflects the soul of a civilization. When a society values discipline, honesty, and restraint, its money holds value. When it values greed, comfort, and illusion, its money dies. Currencies are not victims of mathematics. They are mirrors of morality. Every currency dies because every society eventually forgets what money really is: a contract of trust between people and power. And once that trust is betrayed, whether by kings, banks, or politicians, the contract burns. That's why new currencies always rise from old ashes, not through invention, but through necessity. Because people will always seek something real to believe in again. Every currency is doomed to die, not because of numbers, but because of us. because we demand what cannot be sustained, because we mistake abundance for strength, because we forget that value must be earned, not manufactured. Money is not eternal. It is a reflection of human behavior. And when that behavior becomes corrupted by greed and fear, money decays with it. But every ending carries a lesson. When currency dies, what survives is character. When systems fail, what endures is truth. So perhaps the real question is not why currencies die, but whether we will remember how to live without illusion when they do. If this story made you question the world we live in, you're already thinking more critically than most. Share this video. Leave a comment on what you think replaces money when trust runs out. And subscribe to join a growing circle of minds searching for clarity beyond illusion. Because history isn't just something we study. It's something we're repeating. And if we can see the pattern clearly enough, maybe, just maybe, we can break it.